my screen visible?
Yes, it is, Himanshu.
Okay. So just review, like I think I updated in newsletter also before that we are consolidating on the main index, Nifty. As of now, there is no problem at all because we are still way above 21 days. This is 21 days EMA and this one is 50 days, so we are way above it. So I don't think there is any trouble on this part here. So all indices you see they are standing stronger. Anything that is weaker is as of now FMCG. Otherwise, you see all this broke out just recently, telecommunication, utility kind of forming a small consolidation above 21 EMA. So I believe we still have much upside here also as per the chart. Micro cap, let us see if it can just hold up this area somewhere, 20,100, 200 zone. We have pharma very strong, FMCG. That's what I'm saying. So FMCG is one area where you will see now that maybe this forms a base here and then shoots up. There are certain stronger stocks also in this sector. So otherwise, you see all the major indices are pretty much very strong. So you already have seen the market. The only issue is that the market breadth is more like deteriorating. So that is the concern. So uh, I use Strike platform for this stuff. So how uh, so here I'll be showing you about some diffusion indicators. So that's what I'm saying now. We have a percentage of stocks above 20 simple moving average. They declined while Nifty was moving up, but now we see some progress, some bit of progress. So let us see if more number of stocks heads higher and this figure improves because this is called as divergence when Nifty is moving up, but number of stocks above 20 MA constantly they were declining. So now we have some bit of stability in the market. Similarly, 50 SMA, you will see if we can have more number of stocks participating and more number of stocks moving above. Let's see for Nifty 500, the complete market. So that's what I'm saying now here. See, Nifty is constantly making Nifty 500 now we are comparing with. So you can see here roughly 61% of stocks. Earlier, they were 88% of stocks above 50 days moving average. Now we have this number constantly declining while index is making new highs. So that is something to take note of. That's what I'm observing. And here you will see, it doesn't mean that the market will correct. I'm not saying this. I'm saying this probably market needs more broader participation. So this percentage has to go up. So similarly for 20 SMA, you see the same condition. So unless we have more number of stocks participating, any new position will added will be at a higher risk. So that's what my opinion is as of now related to the market. That's what I mentioned in uh, my one of my newsletter also. So these are percentage of stocks that have RSI more than 50. So RSI is relative strength index that compares the security strength of a security compared to itself. So let's say RSI number of stocks that are having RSI more than 50, it means the number is constantly declining. So same scenario you will observe. So you can pick up any tool here and you can see that now they have added net new 1 month highs. So new 1 month highs are also you will see constantly declining. So we need broader participation. We need something like you need something like this. When index is moving up, you need more number of stocks making highs. If you see index is moving up, but the number of stocks making highs are constantly declining. Even this is just 1 month high. This is not 52-week high. This is 1 month high, which is very easy to form because you see 1 month high is roughly around 22 days in a trading month. So if this number is so that's what I'm saying, like I'm a bit careful. So holding positions with a lesser risk and adding positions very carefully. Once you have gains, then only I'm adding any position. Uh, so you can compare it with the other indices also. So let's see where is the weakness. So this is mid cap 100. So same situation. So mid cap 100 is how can you say now mid cap 100? Now this is small cap 100. So which one is more weaker? So I think both of them are sitting on a very dicey foundation. So I see again I'm saying this doesn't mean market will correct. this may mean that market can consolidate also, or if market shoots up, then we can see like maybe more, we need more number of stocks moving up beyond 20 SMAs, because if index is going up, stocks above 20 SMA declining, this is not a healthy sign in the market. So that's what we are as of now observing as per the factual data. So this is not qualitative stuff. This is just a factual data. So we have then sentiment. You don't need these sentiment indicators, IPOs, and rest all stuff. So, Mukesh ji, can we start with the question and answer, or how do you want, like me going about a lot of charts? I mean, so I'm just observing Sigachi, for example. Now, what is
So
yes?
yeah, so I think the like every time, so people are asking setup and other stuff.
Hmm.
So if you just can briefly tell about that, the stuff setup. I think we have covered it multiple times, but yeah, just brief thing about that
Setup
setup.
is
Hmm.
setup is something that someone is comfortable in trading. So some people trade pullbacks. Some trader trades stocks that are coming from support region. So for instance, this stock is having a support here. So someone will buying at the support, will be buying at the support. Now someone will be buying at the breakout. Now someone says, no, I don't want support. I don't want breakout. I will buy at the pullback. So this is where the stock pulled back from a 21 EMA and came back up on very high volume. So someone is a pullback trader. Now, someone says, no, I am buying HDFC banks because I want to buy stocks that are going down. So there are many scenarios. So setups can be too many. Now, my advice is that you should have one or two setups that you should trade, maximum three, because otherwise you will be like trading all eight, nine setups. You're buying at support, you're buying breakouts, you're buying pullbacks, and you're buying gaps also. Here there is a gap. You're buying gaps, you are buying inside bar, you are buying opening range high. So you will be confused otherwise. So maybe you can look for setups now. Here, this is my personal setup. I look for horizontal line breakouts or some consolidation breakouts. So this one I'm tracking Sigachi, for example. Now this one I'm tracking Hoodco, which offers a very less risk. So I'm tracking these charts. So JK Tire is one. So all the stocks are in an uptrend because I'm doing continuation buy. So I'm not doing any reversal buy. So this is what I'm tracking. Hindustan Aeronautic, for example, one line, because above this point, the stock was never able to close. So, like I post on Twitter, like this is the stuff that I trade. So I trade simple lines and I just keep on adding my stock. So for instance, maybe Inox Wind or maybe I upside, like Jubilant Pharma didn't work, but so far, like I added Dixon here. So similarly, a very small, very tight race, the stock came up and then it came down and spent some time near 21 and 50 EMA, both were too close. The stock was already in an uptrend. It just took a lot of time to consolidate. Then here I entered. So the risk was very less. So if you measure it, it was roughly around 2.5%, which allows your position size to be big enough. And if it shoots up from here, I will be adding it more. So this is very simple setup. Like there is no rocket science. So Tata Power similarly, when I added now following trend line stops, we have Geofin services. I was on vacation that day. So I added somewhere here, 281 is my buy price. So in fact, I skipped it. It went till 287 during the day. I skipped it around, I think 1 p.m. or 1:30 p.m. It came near 281. So that is where I added. So you can say this is more of a pullback kind of trade. The stock went up and then it pulled back a bit and then again it shot up. So this part is unknown. So here, so this is what I'm tracking. So my setup is pretty simple. I posted once on Twitter also, like this is what I'm trading. So longer base breakouts and above key moving averages, and stock, maybe if it consolidates, it's better, because once there is a consolidation, a long consolidation, long base breakout, it's a very strong breakout. So that's what I trade. Yes. So I think we can take questions if people are interested. How many of them? Yeah.
Yeah, yeah. Okay. So means I can ask them to post in Q&A, or we can take directly.
Yeah, I mean, we had that Excel also, or yeah, you can
Ah,
post your questions in Q&A also.
yes, yes. Okay. So start with question about can we compare BSE sector charts also for NSE stocks? Yeah, I think that is given. Chart is chart.
Yes, so you can compare it. Like there are some sectors that are available on BSE, like utilities, and I don't think Nifty has any chart on utilities, right? So I don't think Nifty also has that utility segment, or maybe there are some indices which BSE gives that NSE doesn't provide. So that's better if you look for those sectors also, because it anyway will help you, right? Hmm.
So another question is, what percentage of gap do you consider for a gap trade?
See, this is the difference between Indian market and US market. In Indian market, there is a circuit limit of 20% usually. So when a stock gaps up, like if it gapped up 7, 8%, uh, I can't buy. I don't usually buy. So I wait because stop loss will then be very wide. So if there is a gap up of 1, 2, 3%, I observe the chart. So if the gap is more than that, I may take some pilot position only, very small position. So that's how I go about it. Now, otherwise, I won't trade if there is a gap of, let's say, 13, 15%, there is a gap up, then what is left during the day, right? 20% is the circuit limit. But in USA, it doesn't work. So USA is more like, I think we had this chart SMCI that was making the round. So no, maybe that was Nvidia somewhere. So it was having a lot of gaps in the middle. This one, yeah. So this one was a gap up day. So you could have bought this gap because this is a very minor gap. So uh, if in Indian market we have similar kind of gap, I would have bought it. So otherwise, if you ask me about let's say it gapped up maybe in India 18%, then I won't trade because 2% is left. So I will let the stock consolidate later on and then take entry, right?
So next question is about pivot points.
Pivot points, yeah.
Hmm.
Pivot point is, see, pivot point, I don't know why there is so much fascination about pivot point. So pivot point is, sir, have you used hydraulic crane for changing your tires in a car? What do? You press the lever and whole car lifts up. So pivot point, similarly on the chart, is an area where little bit of demand will lift up the price very easily. So pivot point was first introduced by Sir Jesse Livermore in his work How to Trade in Stocks. I have this book, How to Trade in Stocks. uh, Pivot, he mentioned it to be as pivotal point. So pivotal points. Then you will see Sir William O'Neill when he's mentioning about pre-WTC in his book How to Make Money in Stocks, where he has mentioned about 100 America's greater winner. He's talking about 3 weekly tight close. So that is where both the concepts are much similar, where the supply has been absorbed and little bit of buying will lift up the price. Then you will see William O'Neill also talked about VDU. So it is volume dry up days. So pivot point is an area basically a least risk area, like I showed you in the chart of Dixon. Maybe you can see this area or these areas where the supply has been absorbed, the volume dries up. So he called that VDU, volume dry up. Then Jill Morales called it as voodoo, volume dry up, basically the same concept. Then Minervini came and he called it to be VCP, which is volatility contraction pattern. All these have same meanings basically, that supply and demand, supply is being absorbed and only a little bit of demand when enough number of the shares has been absorbed from the retailers or from the weak hands, then a little bit of buying will lift up the price a lot. So that's what you see here. For instance, SMCI, you see a very long base consolidation. So the last contraction was roughly 14%, and then the stock pulled back a bit from moving averages and then shot up again. So there's a pivot point. Pivot point is basically least risk area where supply has been absorbed and a little bit of buying will take up the price. So you have multiple examples. For example, Dixon Technology is one of the stocks I traded. So this is a very least risk area. So if you want some live examples, they are like you see here, Woodco. So now this zone contracted almost. Now this is a 9% contraction, for example. So this one is a very tight contraction. So this is just a pivot point where supply and demand are in equilibrium as of now. So if stock is strong, it should shoot up. If it is strong, it should shoot up because the supply is being absorbed. So let us see if you get the volume in here. So this is the meaning of pivot point. So if you want to read, you should read How to Trade in Stocks by Jesse Livermore. So this one is the book, How to Trade in Stock. I don't know if you can see here, this one. And then you have uh, Jill Morales in the Trading Cockpit with O'Neill Disciples. You should read that book. You should read How to Make Money in Stocks by William O'Neill. And that's all, right? Yeah.
Okay.
Yeah.
Yeah. Next question.
IPO watch list, yeah, I just download from Nifty Indices. So IPO watch list is very easy. You go to NSE site and then new public issues here, and then you can look for past issues. You can custom your date because this site never works for me. I don't know why. So I always ask from someone, send me 2 year file, or you can download it. It's very easy, right? Everything is on Google now. Very easy. So no market cap, all IPOs. Minimum market cap 500 CR. When you start trailing and moving up, stop loss. I let the stock prove itself first. So unless it does that, I won't move up my stop loss. For example, now uh, this, for example, let's say I bought it here. If it would have retraced a bit, I would still have the original stop. And once the stock proves itself and shoots up higher, I will only then move up my stop loss. Otherwise, it can still take my stop loss and give me a loss. So uh, it's different. Basically, there is no one single answer. Like someone is trading with me, uh, his view is that when he buys, stock should run up, and if it comes below his buying price, he will uh, sell half. So that's how he goes about it. There is no one fine answer, right? That's so. Yeah, this one, scanner for creating a watch list. Oh, my scanner is very simple. I have explained like RS scan I run on MarketSmith relative strength screening. So I look for stronger stocks that are performing better than the market Nifty 50 or Nifty 500. Because you see, if a stock has to move up 100%, it will somewhere beat Nifty, right? So if Nifty has moved up, let's say 15% and your stock is up 18%, that means it's a stronger stock. So RS rating you will get from many softwares. You have Stockage, you have MarketSmith. I think Spider provides that, or maybe you can use TradingView Screener. Maybe you can type in 3 month performance and more than some number, 18%, 20%. So you will get that list of stronger stocks. So RS list I scan for IPO stocks. So I have, for instance, this IPO list. So I have all these IPO names, 271. So I go manually through this list. So it hardly takes roughly 10-15 minutes. So IPO list, RS screen. That's all. I mean, if if I want more like basic fundamental, then I will add EPS year on year to be more than maybe 20%. So I will get some good names. So some more names will be filtered out. It depends basically. So IPO, RS is must that I do. And other than that is more like adding EPS, right? Yeah, gap up I answered, right? You can't wait for the gap to be filled. How do you know gap will be filled? Because gap filling is, there is a myth in technical analysis that gaps are always filled, right? You have heard from here and there that gaps are always filled. So this is a wrong statement. Some gaps need not to be filled. So, so if you see here, Nifty has a gap at 10,447. So it is not filled. So now do you want that gap to be filled? No. So not always. So you can spot chart around 10,450. There is an unfilled gap. Similarly, Titan has an unfilled gap at 700 till now. So I'll show you that chart.
Even HPL Power on 5th of June.
Yeah. So if you see here now, this is an unfilled gap. So this is a myth actually. So what will you do here? You are asking me this day, should I wait for gap to be filled? If you wait, then you are waiting for I think around how many? You are waiting for 7 years now. If you are waiting, so why do you want to? I mean, you can buy at the next consolidation also, right? So gaps are always filled is a myth actually in technical. Twitter is full of analysts, right? So you need to read a book. Martin Pring, Technical Analysis Explained. If you can read that book, or maybe John Murphy, Technical Analysis of the Financial Markets, or Martin Pring. technical analysis explained. So you can read more about that theory. So gaps are mostly like a breakaway gap, or maybe this book you can see here now. This one is Martin Prigg's book, Technical Analysis Explained. So this one you can read. Right? Don't read too much. Otherwise you will stand in front of my house. Right? No headache. Very simple stuff. Right. So yes, sir. Should I set GTT? Yeah, should I set GTT if I have several stocks which are viable, like first come, first serve type, and also to play stop loss? I mean, you can use GTT if you like the chart setup and it is very strong. For example, there was one stock that I bought via GTT. GLS was one. So you can buy these kind of setups by GTT also. Or if you have time, you can buy manually also. Or maybe you can, there is no one fine answer. Maybe you can buy 5% from GTT. Like, let's say you want to buy 100 share, maybe you buy 50 or 40 via GTT. And if you observe chart is still good, you can maybe add more. So there is no one fine answer, right? Log chart always, sir. I always use log chart. So you will see here on my setting. So this is always logarithmic I use. I always use logarithmic chart. How to trail stocks? No single answer, sir. It's more about maybe some people follow 21 EMA and some people follow trend line based stop. Like for example, let's see Tata Power is a chart. So here if you follow 21 EMA, you will be out. So sometimes you have a trend line also. So there are many tools in technical analysis. I sell some portion of my stocks into strength. So I lock some profit and then later on I will trail by maybe EMA, like someone is holding Glaxo. He is a positional trader. I will be getting out because I'm a swing trader. So exit depends on your investment horizon. If you are a long-term investor, I can't recommend you or selling based on shorter term EMAs. You will be out multiple times. If you are a swing trader, I can't tell you to sell when it closes below 200 MA. That is very late signal for you. So you have to find a balance basically. So firstly you need to understand whether you want to hold the stock for swing purpose or you're an investor here will write the complete trend. According to that, it depends where will you place your stop loss and how to exit. It can be moving average based stop. It can be maybe sometimes you will get a chart pattern based stop loss. For example, if you are well versed with technical analysis, you will see here that now that's a broader head and shoulder pattern when Loris Labs topped out. So if you see on the weekly chart, you will see it clearly. So this is a head and shoulder top. So here, if I tell you 200 MA, wait for this is 40 week EMA, which is 200 MA. So if I tell you here, follow this. So I'm getting early exit much above it, right? So it depends. Exit depends. So if someone is an investor, exit will be different, trader different, right, sir? Should one sell stock as soon as it hits stop loss or wait for a day close? So what do you do, right, KG? Like, should one, he's asking like if it hits SL or wait for a day close. Right.
So as you said, right, no right thing to do. So because there are always rules exception, like it can come back also. So what some people do is they just sell it immediately, and in case it pulls back, they can re-enter again. Because so it depends on one's style, but problem with day close is like it can go further down, right? So
Yeah, I mean, it depends on your position size also. So if my position size is 20% and if I wait for day close, now there are some ultra legendary traders that wait for monthly close also. I mean, you can do this on a small position size when you have 3%, 5% invested in one stock. That time probably you can play with fire, right? Now, me sitting with 20% position size in one stock, waiting for monthly close is like my house is on fire and I'm not calling anyone. I am not also running away, just watching closely how much further can it burn. Very dangerous situation here. So stop loss has to be respected if your position size is big enough. Now, I'm not talking about uh, traders who have 3% size or 2% size. There, even if you don't have a stop loss or maybe you are observing for daily close, weekly close, it's fine because it won't impact you unless there is a trouble in the broader market. Like maybe COVID kind of crash comes, which comes once in maybe years. That time you will be saved. Yeah, that's what you were taught, right? Diversification. But you have to analyze now how faster your portfolio moves when you have roughly 20 to 30 stocks. Because with this position size, you will be having 20 to 30 stock portfolio like a mutual fund. So how fast it moves. Here you have more risk also because your entry should be precise. Because for taking bigger position, you should be well versed with the concepts. So here I won't wait for my daily close or weekly close. So I will exit. Right.
Yeah.
Uh,
So I actually violated this rule in PI Industries. So in December, there was a news from China, right? That some companies coming into their competition.
yeah.
So that stock, like, yeah, that this day. I did actually it's in my daughter's portfolio for a long term. So I thought, okay, it's okay. I'll just wait. And still it has to reach that, and it's already like 2 or 3 months gone. I could have invested it somewhere else. So that's a live example
Hmm.
of not selling. Uh,
Yeah. So
Plus.
maybe, yeah, maybe because you can just set a price alert somewhere here. By the way, Astral has similar structure. I
Hmm.
remember Astral. Yeah, Astral has similar structure, but as Astral broke out very strongly. But PI industry is still taking time. So this one is a leader in, I think, piping segment. So this one is strong, right?
Yeah, yeah, yeah. This one I was able to sell somewhere like 1.5 years back. Or like I started following you on Twitter. I was I just have to buy. I don't have to. So
So someone asking setup is like uptrend continue. See, sir, setup is something that you can trade. That has an edge. Setup should have an edge. What do I mean by edge? If I flip a coin, you lose 1 rupee and you gain five. If you win five, six, seven. If you lose one. Now, this is very outdated of 1 is to 2 or 1 is to 3 is very outdated methodology. Risk to reward ratio 1 is to 2, 1 is to 3 is old school methodology. Now everyone should aim for, in my opinion, minimum 5 to 6 times of their risk. What like stop loss is let's say 4%, so stock can easily go up 20%, right? If your stop loss is 40%, which is very crazy level of stop loss, their stock has to move up 200% for 5 hour, which is difficult, right? Stock has to go up 3x. 200% is 3x, not 2x, right? So here, setup is something that has an edge. So for example, now setup can be reversal also. For example, now this is the chart of CAMS. So now some value investors buy as it is going down, like depending on the value. Now some do bottom fishing. Now this is at the support, so I'm buying here, which is risky a bit, but they do like this. Now for them, the setup is like bottom fishing. For someone, it is like trend reversal. Now this was in downtrend, then sideways, and then picking up uptrend. So you see where the change of character happened, like when the stock changed the trend from sideways to upwards. Someone will enter here. For him, it is a reversal setup. Then once the stock picks up momentum, let's say for example, the stock moves up and I am buying, let's say here. For me, it is a continuation setup because it was already in an uptrend. Now it is moving further up. So this is continuation. So again, depends on what do you want. If you want, like I can wait for 2, 3 months here and I'm comfortable sitting with 0% gain for 2, 3 months, you can buy here. If you say no, I will enter, I will miss this move, but I will enter at the confirmation, then you can maybe buy at reversal. But you want no, I want for further probability because here also stock can fall back. For example, Deepak Fertilizer. So if you see here, now if you see here, someone if tried, he burnt his hands. So some people prefer continuation buy. Continuation is like, okay, here the trend reversal happened, I'm buying here, I'm buying maybe here, I'm buying here. So these are continuation buys. So you can prefer whatever you want, sir, right? Manual screening process for markets with it's very simple. It's more like relative strength screen I'm running, nothing else. So I have relatively stronger stocks. So RS rating more than 70, I look for, and then I like click, 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 and certain price filters. Like I don't trade less than 50 rupees stocks, or I don't trade stocks below moving averages. You can do that, but I don't do that. So that's what I do, right? From MarketSmith. How to identify stronger sectors. So your strong stocks will take you to stronger sectors, right? So I think I wrote multiple times before also. For example, this one, IOC. Now, not talking about today, but for this move, IOC, and you'll see Oil India. See the move here. Then you see BPCL, HPCL. So if a lot of oil companies were on your radar, so isn't it oil and gas sector is very strong, right? Hindustan Petroleum. So there was one company, Hindustan in the Petro. Look at the chart structure. So your scan of relative strength will show you stocks, and those stocks will guide you to the strong sector, right? For example, in FMCG now, most of them are setting up. So you see Tata Consumer, for instance. So this one is hovering near the highs. You see Varun Beverages, Tata Consumer. So if you wait for sectoral index, let's say for example, you wait for FMCG to make a bottom, right? So let's say you are waiting for, okay, FMCG to make a bottom and then I will buy stocks. You will be late because stronger ones moves before the index, right? I'll show you one more example of electro steel casting. So here on Twitter, you saw metal is strong, metal is strong. But this chart is strong from the level of 60, 70 rupees already. So it went up 3x already. And now you are hearing metal is strong. When metal is strong, even before metal sector came, if you are looking for, let's say, for example, okay, let's compare it with metal sector, CNX metal, right? So now you see here. Now what is, we have the common timestamp, right? I can do that here. Time is common. Okay. So let it broke out here, right? This one index, and you see where is the stock? The stock already is sitting at 110. Are you getting my point? So if you wait for index chart to look for stocks, you will be late. So see here, it broke out here. Where is the metal sector? When the stock is sitting here, 70. The metal sector is going down. So that is how you spot. It's very common sense, basic common sense. No rocket science, no complexity. You just have to look for stronger stocks. Stronger stocks don't go down. Right? Darvas is writing, right? How I made $2 million in the stock market. He is writing. Uh, I am looking for the stocks that are resisting the decline. His statement on in his book, How I Made 2 Million. So that's what he means. Now sector is going down. So anytime you see media sector is down, or maybe metal is down, or maybe for example tomorrow bank Nifty is down. So you can spot for stronger stocks that are standing up instead of buying HDFC Bank. So that's how you go about it, right? How do you handle your trades during sideways volatile market? What do you mean by market, right? Someone asked me, market, what do you mean by market is stocks? So I manage my stocks without, so during live trading hour, I close this. I don't see where the market is. What if you mean market is index? I showed you, right? Stronger stocks moves independently often. So you see here what Elecon did. So what will you do in a sideways market on this chart? So this almost 193 to 1100, 1200. Now, in the middle, market was sideways multiple times. What can you do? You can only follow your rules. If your stock is strong, you will ride it. You will ride the trend. That's it. Nothing else. So stronger market, sideways market, everything will be defined by your stock, right? So that's how you go about it. So yeah, Tata Consumer, TVS Motor, yeah, they are bullish. They are bullish setups. How do you study my journal? I have stats. I wrote a thread on Twitter on my journal. Average win, average loss. You have to read it. I have subscription of TradeWiz. So I they do all the calculation for me. So this is like you can. I'm not getting any money from them for promoting this, but I use a platform called TradesWiz because earlier I was maintaining my Excel. It was taking a lot of time. So now TradesWiz is doing all the calculation for me. So all those stats, MAE, average gain, average loss, win percentage, total number of trades, total number of winning trades, total number of losing trades, my drawdown from the peak, every stat is being calculated from the platform. You can also do it in your Excel sheet also, right? So chart patterns, yeah, chart patterns will be same. You don't need to read chart pattern anyway. You can trade still. See, I have not used any chart pattern on this chart so far. So you can trade it. You don't need chart pattern always. Why do you need like cup and handle or maybe head and shoulder or maybe one enough? Yeah, it's like a running train. You are driving on expressway. So you drove for 1 hour, you took a break, then you again started driving, you took a break, then you again uh, started driving for 2, 3 hours, you took a break. That's how stronger stocks move. So it's like a fast moving express train. It has platforms. So you don't need chart patterns. So if you know, it's better. If you don't know, it's still better. You can trade. Now see here, how many times it moved up, then it consolidated, moved up, then this was a consolidation, then moved up a bit from 700 to 860, consolidated, then again moved up, then moving up constantly. So yeah, that's why. So how to deal with 8% stop loss setup? How to deal with means I didn't get the question. You can build a position size, right? 8% position size, if depends if you want to lose 1% of capital, you can make a 12.5% position size. So if your position size is 12.5% and stop loss is 8% deep, you will lose 1%, right? So that's how you will deal. Yeah.
So I think it's from that book from William O'Neill. So what he mentions is 8% is max you should take, but it doesn't make you have to keep the stop loss 8% every time. It should depend on chart.
Hmm. Correct. And it's like how to deal with is more like, sir, like my teacher once asked, if there is a lion in front of you in a jungle, what will you do? What will I do? Lion will do whatever it wants to do, right? I will run away. So if my stop is hit, I am out. If it is up, see, after your entry, you never know what will happen. Only thing you control is entry, point, your stock selection, and your position size. After you buy, stock can hit your stop also, or it can fly high. So that is unknown. That is all on probability. You are playing the game of probability and you will ride the trend. So how to deal is more like you will exit if it comes down 8% or more. Right? Any stop loss of more than 10% means your entry is poor. Right? I saw one chart and you also saw with me. UCO Bank was one. So someone giving a stop loss, like buying somewhere had 67 stop loss at 33, if I'm not wrong. That was the stop loss. 30% stop, 50% stop loss. Very dangerous game. What will you do? 30% stop loss will take a lot of time. Now your time will is wasted. You'll never know how long will it take to move further up. So that's what I mean. Now, how to deal is today. Do you play base on base? These these foreign books actually will make you more confused, right? So the base on base is coming from William O'Neill's book. This is base on base. You bought and the stock then again formed a base. This is called as base on base. And then you buy more here. Yeah, I play. Play means I pyramid up. So that's how I go. How do you build position size on winning trades? How to move stop loss? So, sir, stop loss again, it's no winning trades. What I do is that let's say I have 100 rupees invested. At the next buy point, I add 50 rupees more, then 25 more, 12 and a half more. I'll keep on pyramiding up. Right? So that's how I add to my winners. Stop loss is more like there are multiple scenarios here. I again answered before that you can use maybe a smaller moving average. Maybe you lock some portion into strength if you are a trader. You lock, let's say 30%, 50% into strength. And then for the remaining portion, you can have a stop loss. Stop loss can be dependent on some trend line. Like early days, Dan Zanger, when I was reading his newsletters, what he used to do was he never had a stop earlier days. So what he did was once the stock is further up, he will protect his buy price and then he will observe manually. So whenever there is a weakness, he will exit only then. But later on, his strategy was changed because this is, I'm talking about 1997, 98 newsletters, 2000 particularly. If you read the newsletter of year 2000, available on his website, so you will find how to place the stop loss. So there can be multiple placements, 21 EMA, or maybe some traders will say, no, I will follow 50 EMA. This stock is very strong. For example, there was one name called as Inox Wind. Now here, some will say, no, sir, I bought here. I don't want 21 EMA. Then I want 50 EMA because for this stock has not broken 21 for very long. So I will be having 50 EMA as my stop. Some will say, no, 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 21, I will be getting out because then the stock wastes a lot of time. I will re-enter. So I mean, I re-entered, I got out, then again I re-entered. So that's how you can go about it, right? You can have trend line based stop when you spot, for example, okay, because I'm a swing trader, for example, I'll show you. So this one is a logarithmic chart. So sometime what happened, there is a trend line, right? There is a trend line based stop. So the stock is following a trend line. So let's say I'm a swing trader. For me, this move of, for example, 116% is too much. So I can exit based on trend line also. Or maybe there is a bearish chart pattern. Bearish chart pattern, for example, Costco. Now, not talking about now, but earlier when I was in Jakarta, when we used to trade this. So if you see here now, we bought and immediately it was like a double top and then there was a breakdown. So here there is a bearish chart pattern also, 21 EMA breach also. So this can also happen. And later on, what happened, you saw there was a correction in the market. So that's how we go about it, right? Exit strategies, I just answered, sir. It depends on if you are an investor or you are a trader. If you are an investor, your exit strategy. I did a free webinar with SOIC. It's on YouTube. 40-week EMA or swing low, whichever is higher, I discussed there. And if you are a swing trader, I again discussed just now trend line or maybe chart pattern or maybe a shorter moving average, multiple scenarios, right? Any advice for how much difference to GTT trigger price and buy price? I have 1% difference, not more than that when I am buying a stock, not more than that, right? How would we protect ourselves from the unforeseen events which comes overnight, bringing average 10% down? 10% down means I think, Mukherjee, he's talking about, I think 10% market is down. Index.
Probably, or yeah, could be, or the stocks maybe.
Yes, at 10% down overnight. What happened?
Just
What?
sell. That's all we can
Yeah, I
do.
mean, why so pessimist? Yeah, it can happen, but stop loss is the best insurance. What else can you do?
Or
See, if I go much detail into books now, you will hit me hard. Now, there is a book by Perry J. Kaufman, System Trading and Methods. Do you want to read it? System Trading and Methods by Perry J. Kaufman. So in this book, there is a topic on price shock. What you are asking is about price shock. Price shock is an event like 9/11. It's an act of God, which no one knows about overnight. So market will gap down. So in this book, Perry J. Kaufman discusses a strategy where he says that the stock and all the stocks will react. They will head down immediately. But now, should you exit or not? Now he says that the worst is already discounted. But I disagree up to a certain extent because when I read other works also, they say that this news may have a longer impact also. So your price can further drop down. First day is the panic selling. Now, second day, it might be possible that it can further go down. So stop loss is the best insurance, right? Nothing much you can do. How to do pyramiding? So I am sharing, right? Like I will pyramid up Dixon, for example. So I bought here. I will add more if it moves up. So volume should be very high. On pyramiding, I need good volume. I need price more than at least 3-4%. So why don't you use candlestick? I can use, like, if you want, I can use candlestick also. But why you don't like bar chart? I like bar chart because of less noise. In candlestick, what will you do? Oh, this is bearish engulfing. This is hammer. This is doji. This is uh, this is a Tasuki gap, something like that. So that's why I use bar chart. I just focus on price and volume, nothing else. So if you observe here, I am using HLC bar. So there is no open price also. So I'm more comfortable like bar chart. Otherwise, if you are angry, I can switch to candlestick also. Right. Which setup you suggest for beginner? Continuation buy. You can read books by Sir Mark Minervini. Because for beginner, you need stock to be in an uptrend, right? I don't want you to do bottom fishing because you may burn your hands. That's, I mean, my advice, but I can't control you because what falls down attracts people like Paytm, HDFC Bank. So when stocks are moving up, when they are forming a base or maybe setting up for continuation buy, beginners, I mean, I will advise for continuation buys. Right. If chart is very good, but RS is around 50, EPS is not that great, what to do in such case? Actually, ma'am, we always have stronger stocks, right? Why to devote our energy on these stocks? India is a very promising market now. We have lot of setups. They are strong. So I will personally switch over to stronger stock. I won't be looking for loss-making companies. For example, sometimes I skip names like GMR Airport. Now something might come up, but there are so many charts to be honest. So now here you see loss-making company. Now I think it can be profitable, cannot be profitable. I don't know. I don't want to trade because when you have so many setups, I don't mind missing out some of them because you just need 4 to 6 stocks to make money. So I don't have FOMO. How this is the question again, how to stay away from FOMO. So FOMO is a beginner's mistake. So if you're a beginner, you will have FOMO. FOMO is fear of missing out. You buy stocks like you are a kid in a Hamlet store. So FOMO is beginner mistake. One way you can fix it is by maintaining a trading journal. Record your trades. Every weekend you read your trades, check your entries and exits. So you will observe if you are a beginner, your entries will be very poor. You have to fix your entries. Once you do this exercise immediately, after 3 more months, if you will be taking a fresh trade, you will recall that, oh, I took a similar stupid entry much before. So I don't have to repeat this again. So that's how you understand that, right? Ages, chemical, upper wick. Yeah, see, again saying now, because you are looking candlestick chart. So you are talking about I want to check Aegis Chemical. There is a upper Aegis Logistics, so there is a upper wick. Now I don't see any trouble on chart, but okay, so now you see a trouble. That's why I use bar chart. No headache at all. For example, you will see, I will show you a chart of Psi and DLM. Now you will be afraid that day. This was it. This day. So will you be afraid now here? Candle with upper wick. This is your question. How to deal with the breakout with candle having upper wick? This is upper wick and the stock further doubled up. So that's why. I will show you one more example, TVS Motors. Uh, this was somewhere around, I think here maybe. Not here. So there was one more gap here. Now you see here. This day. What will you do? Now, peace of mind is important. Trading, investing should be peaceful. It should not be giving you headache. Headache comes when you study too much, right? So headache comes you when you analyze a lot. So you see, this was a price at 900, shot up till 1100. Now consolidated again, then shot up, then almost from 1100 to again 2100, 80-90%, right? So can we see OFSS for gap trade? Ah, Mukesh ji, I think you traded, someone else traded this in the group. OFSS.
Yeah, Dr. Saab.
He traded it. So this was a gap up of almost around 8%. So I will take some position, not heavily, like maybe 5% position size, because if 5% size hits my stop loss, I will lose 0.4%. But again, I am saying this was the right entry point if you have spotted it this day, because that's where the consolidation came to an end and placing stops here. And then it pulled back, then again shot up, shot up. So this was pyramid buy for someone who took an entry here. Or maybe you can say this day, and maybe you say third entry will be this day. These three entries. Later on, 8% gap, still fine. Now, this is where you have to adjust the position size because if position size is 20%, and if it hits 8% stop, you lose 1.6% of your capital, which is very high. So that's how we go about trading the gaps, right? How to identify shift in market structure? People are obsessed with market, right? No, market is the stocks you hold. Stronger stocks, you have stronger stocks are in your watch list. They will tell you about the market structure. So if you see there are a lot of false breakouts or climax moves, like I'll show you on 19th October. This is when 19th October, there is a climax move. You have this in your watch list. So Deepak Nitrite, 19th October, fall down. Then you have DMart, I think. So again, 19th October. So market is getting weak because stocks are telling me 18th, 19th October. So stocks are telling you that there is a climax stop in many names. So market is weakening and then the correction started. So you are checking index. People were checking Nifty. Nifty is fine. Nifty is still looking fine. But your stocks will tell you about the market structure. So if your stocks are working, if your trades are working, you will increase risk. If they are not working, you will not increase risk. Very simple, right? Yeah, this how do you decide where to keep the stop loss? Uh, I did an interview with Samco Mutual Fund. You can read those two-part series. I think many months before I did one YouTube video with them, how where to place the stop loss. So once uh, you check once. How to identify the leading sector? Yeah, again, stocks will tell you. Stocks. Your scanning process will give you stronger stocks. Stronger stocks will tell you about the strong sector. Sector rotation, how it works. For example, I use RRG charts. So RRG tells me about this stuff which you are asking. But again, I am saying that sometimes what will happen that your sectors will be late. I showed you one example, electro steel was one where you got like it was performing better than. So RRG chart like sometimes shows me, okay, real estate is losing momentum. So, but stronger stocks behave differently. Now here real estate sector is having some pullback, but you see the chart of DLF. So that's why I'm saying stronger charts will give you early indication, right? So that's how you get to know. RRG charts I use, sir. This one is very a bigger question. What is this?
Multi-year breakout, your favorite.
Multi-year breakout if it actually works. Because over a period of time, the fundamental also grows. Like for example, Nalco had a resistance around 139 in 2008, which has already been crossed. And sir, Nalco, this one? No, Nalco he's talking about. National Aluminium, I think no. Nalco. Which one is this? Am I pronouncing it wrong? What is it? I think he's talking about National Aluminium, no?
Yeah, we can see the price, I think.
Yeah, because
Yeah,
I think he's
I think.
about 138. He's saying there was a resistance in 139 in 2008.
Hmm.
Yeah,
Yes.
so this is a multi-year breakout because there is a one resistance which is very close. Right. So this one. So I'm not focused on this part. Right. I'm not considering this part. This will not create any headache. Your question is like Elecon chart. I will show you. Now here, now Twitter will say this is a multi-year breakout. I'm asking you what the stock was doing here. Right. This is not like people say multi-year breakout, but hardly any, this part hardly plays any role. This is not important because this is very older portion of the chart where buyers are not sitting. So here I will take entry or maybe somewhere here on monthly I'm explaining you. Here I will more probably keep on adding more. But you are talking about multi-year breakout when there is just one resistance of 10 years before. Now you're asking me, it does it work or doesn't work? What works? I mean, this is not some sort of right electrical motor if it works or not. It entry was much before. All I would say is that entry is much before. It's not here. Even if I'll go to daily chart, I will find entry somewhere here. So already the chart moved up 10x, and then you are saying there is a multi-year breakout. Then what the stock was doing before? From here it again tripled, right? That's that's what I mean. Do you think that in a volatile market, a lot of churning is good as compared to fresh bull run? Do you want to answer this, Mukherjee? I don't. Do you think?
So, yeah, I think it's more to do. So you don't have to pre-decide like what you are going to do. Let your chart decide. So you have taken the trade. Are you pre-deciding that I'll sell it after 10%? It can move 50% also, right? So in the end, it should match. It chart should tell you what to do instead of you saying that, okay, I will do it. So it's a story of lion, right? That it's up to lion whether he wants to eat us or not. We just have to stand there.
Yeah, because there were many charts, right? They doubled, tripled. For example, I showed you one Inox Wind, right? When we traded that, this all is still very strong. So why do you want to sell this? Like depends what kind of trader you are. If you are a swing trader, you say no, 30-40% is enough for me. I will shift to another name. Depends again. You can do that, right? So I answered this question. Should I set GTT if I have several stocks? Now, what is the scenario for best breakout setup? Scenario is, sir, as per me, every best scenario had a long base breakout. Long base and then a bit of consolidation, volume dry up, and then the volume comes in at the breakout. This is the best case scenario for a best breakout setup. Like GLS also you can check. How to identify RS of a stock? Where is the chart? RS you can check for, there are multiple tools. You have Stockage also. You have Market Smith also giving you this rating. So those stocks that are stronger than the market, they are relatively stronger. Uh, so relative strength means that your stock is performing better than the benchmark. So there are many softwares that show you relatively strong. For example, if Nifty moved up 12% in 3 months, you want to look for stocks that have given more than 12% in 3 months. So they are stronger stocks. Then you will observe the charts manually, right? So SMCI again, that's a very specific question on gap. I explained, right? Gap's lower boundary is my stop loss. So SMCI, for example, I answered, right? We just covered. So yeah, renewables have huge sector tailwinds. Do you think we can risk entering it even if the stock does not give a proper base and goes vertically up? You can do that, sir. I don't do that. I mean, if a stock is going vertically up and you think sector is strong, you can buy. I don't buy. I will wait for the proper setup. So like renewable Inox was viable here or maybe again here, then again here, then again here. 5 entry points. So I don't have FOMO. So there I because I you need 4 to 6 stocks with good position size to make money. You don't need to buy the complete market. So I mean that's my opinion. If I have good 5 to 6 stocks with good position size, they move the portfolio a lot, whether from renewable, whether from nuclear energy, or maybe non-renewable energy, or maybe some coal, oil and gas, realty, infra, I don't care. So 4 to 6 stocks, right? In case I what exact should be the exit strategy, I discussed exit strategy in detail. Position sizing, biggest issue. So position sizing, it's very your entry price, your stop loss, difference between both of them, your entry price and stop loss, and how much are you willing to lose. Let's say you have 10L portfolio and you say I will risk 10,000 rupees. So this difference, let's say your entry price and stop loss difference is 8 rupees. So you will buy 1250 shares, right? 10,000 divided by 8. That's how. So if you want half risk. So position size is dependent on how much are you willing to lose. So if you say I will lose 5,000, then 5,000 divided by 8, 625 shares, right? That's how we go for position sizing. Yeah, profit booking, I discussed, sir, it based on trend line. It's based on bearish chart pattern or maybe some sort of uh, reversal structure. That's how we go about stop loss. There is no one area where you say I will exit. Stock can shake you out, right? So there is no one area. Be liberal with your stops. Once the stock is in gain, be liberal with the stops. So observe it, right? How to find stop loss on charts. I had a webinar with Samco. You can see that two-part series. I think 1.5 hour, right? Profit booking in winning trades against exit strategy that we discussed. Jill Morales gives entry at gap ups. You don't. Whom to follow? Take example Nvidia gap up. I never said I am not taking entry on gap up. I am taking entry on gap up. I think you got me wrongly. In Indian market, all I am saying, if a stock gaps up 18%, I will not buy because 20 is the upper circuit limit. In USA, I can still trade gaps because there is no upper circuit limit. So stock can literally run up 60-70% also after a gap up of 12%. So I will enter there if I am trading a gap up, right? So I think you took me wrongly. Indian market, I won't trade the gap up. Similarly, Indonesian market has 25% circuit limit. So I won't trade if there is a gap up of 22% because it's a risky bet now. In USA, there is no limit. That's why we can trade there, right? In trading view, if you want, if someone is asking trading view for stock selection, so you can just go to their stock screener. You can maximize it. You have multiple screens here. All-time high ready-made screens are already there. New 52-week high, or maybe highs, or maybe 1 month gainer, top gainer, 3 month gainer. You can just add your filters, for example. So let's say you want some filters here. So you can see some technical filters are already available, some financial. So whatever you want to frame it, you can frame here, right? Stock selection. Win percentage from April has been good. Yes, it was lower before because not lower because I was not trading, right? How to screen for gap ups? Any free source for RS rating? Again, saying relative strength is when your stock is outperforming the Nifty. So if Nifty moved, let's say 10% in 3 months, you can pick any software where you can look for 3 month performance more than 10%. So it can happen in TradingView Stock Screener also. It can happen in Stockage also, but I think Stockage is paid, right? You need to pay for some scanners and something if you are serious about trading. Because see what happens. I was also reliable on these free sources, but your life becomes easier with few subscriptions. So what happens? They do a lot of work for you because we have some technology here running that helps you and saves your time. So for example, I think TradingView came up with this methodology where I can see charts quickly. So I don't mind like I think it's available in free version also. So I can see all the charts quickly, right? So you can just run your own screens here for any country you want, right? So that's how you go about it. Free source, yeah. Free is yeah. Mukherjee, free. I think I only know TradingView for free. Charting doesn't have it.
Yeah, RS rating, I don't think nobody has free. It's kind of a proprietary of markets.
I think yeah, they won't give it for free, I think.
Yeah.
Screen for gap ups. Charting, sir. So today's low should be greater than yesterday's high. This is gap up, right? So this scan you need to run on charting. What would you advise positional traders who want to trade only on weekly charts? Should one put stop loss at 7 to 8% or exit based on 200 MA? No, you are getting me wrong. 7 to 8% stop loss is when we enter. After we have entered, stock runs up. Here you can't say my stop loss is 8%. You are doing it wrong. Only for the entry part. After that, we will have a stop loss based on the chart itself. So we don't want to choke the trade. So if you say no chart is at 400, I will place my stop loss as 8%. You are choking the trade. You are an investor. Your stop loss cannot be just 8%. You have to give some portion back to the market when you will exit. So here you can't say 8% stop loss. You will be out. That means 8% you have to read this book again because you are talking about William O'Neill's work, How to Make Money in Stock. I think you read that book. That's why you are talking about 888, like 8%. I think someone is talking about 8% multiple times. So 8 is the figure coming from that book. So
Yeah.
8% is only for the entry point he mentioned. After that,
That
he's also not having a stop of 8.
yeah, that also is like maximum you should have. If your stop loss is coming more than 8%, you should not go into that trade.
Yeah, correct.
So it's not that we have to keep 8%. It should be based on our chart. So if you have a tight setup, then it usually comes around 2 or 3 or 4%.
Yeah, so you should read a book by Stan Weinstein, Secrets for Profiting. It's not in my shelf. Secrets for Profiting in Bull and Bear Markets in other room. Otherwise, I would have showed you. So you can see, read that book, sir. Or you can see my meetup with SOIC. Ishmohit has uploaded a video. I think you know about SOIC. They uploaded a video. I did a video on positional trading over there. It is better to log gains by staggering stop losses rather than sell them into strength. Sir, again, depends what kind of trader you are. I sell some portion into strength, and then I have a liberal stop, and then I manually observe the stock. So, for example, BPCL is one stock I'm holding for long. So now here I sold some portion into strength, I think somewhere here in the middle, and then I am trailing the rest. So there is no one single answer, multiple answers, right? So you can do that staggering stop losses also. But anyway, if it pulls back, those stops also will be hit. You have to do that. You have to practice because this is kind of a bit hypothetical question. If you will practice enough on charts, you will get to know what works for you, what doesn't work for you, right? Minimum length of base. Uh, I prefer longer base, minimum 2, 3 months long base. If it is uh, a short base, I will still trade it if I am not having any longer base. Uh, Screener for gap up. Again, charting you can use. I explained. Today's low should be greater than yesterday's high. This is a gap up, right? How do you decide which sector is in trend? By looking at the stock charts. So I see for 2200 charts manually, but you can't do that. So probably it's difficult. But what I do is I run my RS scan and I get roughly around 300 names. I look for stronger charts in them. They come from a particular sector. So they take me to a stronger sector. So that's how I come to know about sectoral strength. How to find leading sectors for trading in weekly time frame? Same answer. My stocks guide me to the strong sector. If I wait for index to show me, then I will be late. Stronger stocks will already run up. How to add all the sectors in trading view? I think this is more of a general question, right? So how to add? I mean, KG, you want to answer? Just create a watch list and then add.
Yeah, so the main question is you where to find this, right? So I think
Uh,
Stock Edge or something has even trend line. So if you have a paid membership, you can get all the names from them.
yeah, free one if you want. Screener has it, I think. So I
And
have this screener
search on the
subscription
Twitter. Actually, some people share it, so you
one.
can search on the Twitter as well.
Twitter also you can search or you can see here. There are many sectors available. Like I have subscription, so I don't know if it is available in free also. Trendline also you can run this, right?
Yeah, trend line, Stock Edge. So there are many options, but I think it's most of them are paid. So, but Twitter, I think we can get it. I have seen sometimes.
Uh, so someone asking about pullback setup if high-tech pipe is a good pullback setup. Yeah, it is a good pullback setup. Correct. Yes. I follow the breakout setup. Just one question, when you add more quantity, where you set the stop loss? Stop loss will be the same, sir. Like again, this is the area where I think uh, it's a lot of questions coming from. So it's basically based on some moving average or maybe trend line or maybe a bearish chart sector. I can't have one approach for all the charts because then I am fixing my rigid rule on something which is dynamic. Every stock chart behaves differently. Like I showed you that I can't exit Tata Power based on 21 EMA because it is following a trend line. So for here, trend line will be my exit or maybe trimming area, right? So now let's say I added here, then I will add more here, then pullback setup, I will add more here. That's how I keep on adding. Stop loss will be the revised area where I have to place the stop loss. Now where to place the stop loss? I did a webinar with Semco. GST has to be authorized daily. It is because you have not submitted the DDPI form to the broker. Now this you can Google up, right? If it is asking for your authorization, you haven't submitted DDPI. You can Google it, DDPI form. How do you identify a breakout is strong or not? Through volumes. consolidation before the breakout, length of the base, volume. So this is how you get to know about strength of the breakout. Like Glenmark Life Sciences, you can check. So price moving up on strong volume, and when it is pulling back, volume is very less. That's how you get to know about strong breakout. 20, can you give examples of Oliver, okay, Oliver Kell 20 and 10 EMA crossover strategy. He did a complete webinar on this, so you can read that webinar, right? He has a book also on his website. So
You
this
are,
is
I
also
think, Trader Lion recently published some of the examples also with him
PPT, yeah. They
last
give
week only. So you can check
yeah,
the Trader Lion Twitter handle.
PPT, yeah.
Yeah, so
Correct,
you
correct.
get an idea.
Total risk on portfolio is total risk on all the stocks that are open. Roughly for me, it is less than 5% total risk. So again, market condition. Market is nothing but the stocks that you hold. If I if I get a chance, I will delete all the indices. So you have to just focus on the stocks. Stronger stocks will tell you about the health of the market. Market is comprised of stocks, not other way. So if there are no stocks, there will be no index. If there is no index, there will still be stocks. So you are focused only on the index. I am saying you focus on the stocks. So stocks will tell you about the market health if your trade. There is very simple stuff. You make it complex on your own. So if your trades are working, you increase risk. If your trades are not working, you decrease risk. This is the basic thing that we do in trading. There is no rocket science. Anything apart from this, you will be wasting your own time because that will lead to analysis paralysis. You will do a lot of analysis and you will be paralyzed to take a decision. So that's why I'm saying if your trades work, you increase risk. If it doesn't work, you decrease risk. That's how you get to know what the market has. Your stock selection should be strong, right? How to catch stocks before it moves on weekly chart? By shifting to daily chart. So this is the answer. So here I took an entry, like I posted on Twitter this trade, but weekly chart will not show you this point, right? So weekly chart will show you entry somewhere here. If you are trading from Twitter, then this is the breakout. Actually, this is not the breakout. It is somewhere here. So your question is that how to identify here? Again, your scan, relatively stronger stock scan, and then observing the charts. So you will take an entry somewhere here instead of here. There you will pyramid up, right? Working professionals who are interested in technical analysis, any advice? You have to go for positional trading, trend following, weekly charts with 40 EMA and 10 EMA on the chart. So that's how you will trade. So this is your positional trading. So this is a very minor cup and handle breakout or a very simple consolidation breakout, and then follow the weekly charts if you are a working professional. I mean, that's my advice. Obviously, you can do Bible gap up like NVIDIA. Yeah, we discussed gap up, right? So multiple times, like I have answered, gap up. We wait for 1 or 2 minutes. If the gap sustains, we take entry. Placement of the stop loss is some aggressive traders place the stop at day low or the gap low. And some traders say we place the stop at previous day's gap high, like previous day's high, where the gap will be closed. That's how we trade gap. There is no rocket science in it. Is it too risky to have 25% position sizing in all your trades? Now that's hypothetical question, sir, because I get from your question you are not trading based on 20. If you trade from 25%, 20% size with a less stop on your position, again, stop loss decides your position size, not other way around. So if your stop loss is, let's say, you can't say I will have a 4% stop. You are no one to say this. Chart will tell you where is the stop loss. If you want day low stop, yes, the day low stop, depending on your entry, it might be 2%, it can be 4%. Now, if you are entering late, it can be 6%. So let's say you are entering very late, then your stop can be uh, where if you are entering, let's say here, your stop can be 10%. You can't say 4% for all the charts. Chart will tell you where is the stop loss area, right? So that's one. When should you partially book your gains? Depends on your average gain of your trading journal. So if your average gain is 6%, 7%, when the stock moves up 2021, you can still lock one third maybe, right? That's what you go. Maybe when it moves up 14%, you can lock half. That's how you go. Yeah. Sharda motor chart, someone is asking how we are going like stock specific. Sharda motor chart. This one was there entry on 14th February. He is asking 14th February. Huh? 14th February? Okay, okay, okay. Okay, this is weekly. Am I checking somewhere else? No. So Sharda Motors chart, he's asking. Okay, this one is there. 14th February. Yes, there was an entry on 14th February. During a broader market consolidation, is this okay to make new breakout position or is it is advisable to pyramiding? Again, sir, market, market is your stocks. If your stocks are working, you increase risk. If your stocks are not working, you decrease risk. That is the only scenario you have to look for. The market is comprised of stocks. So your stocks will tell you what to do. So if I'm making money on my previous trades, I will keep on increasing risk. And if I am not making money on my recent trades, I will decrease risk. So that's what I do. I mean, no. Is there any remedy for shakeouts? Now it depends. What do you call a shakeout? Shakeout, some people call like just a pullback also, they call it shakeout. So the stock here pulled back, they call this also as a shakeout. This is not a shakeout, right? So for example, now here, this is a shakeout when the stock breaches a support zone and then comes back up. So if you're already holding it, you have to take a stop loss and re-enter. If you're not holding it, you will take a fresh entry, right? Uh, GPIL, I mean, stock specific, let's avoid basically stock specific because I'll be then ending up checking the complete market. So, I mean, there is no, yeah. So here, this is a shakeout. I mean, the stock hit your support. We call it hard pullback also in technical analysis. The stock came down, shook your support and came back up. So you have to take re-entry. How to know if one should be positional or swing or day trader? It is like asking me, I met a girl on Tinder, should I have dating? Should I date her? Should I marry her? Or should I just stay for 6, 7 months? This question is like that. Like one should be positional trader or swing trader or day trader. Now, how do I know about your personality? My one of my friend is pilot in Indigo. I can't recommend him to be day trader. So he says, I don't want to do day trading. He came to me and said this. I didn't say him. So this is like a very difficult question. You need to understand your own personality, what suits you. So how to know it? If you if you think selling a stock at 40% and then seeing the stock that further moving up 200, 300%, if it troubles you, you are not made for swing trading. If you think that you are holding for 500% gain any stock, and if it sleeps in the middle for 3, 4 months, you are not comfortable in holding it. That means you are not comfortable for positional trading. So what I do is a combination of swing and positional. So I lock some gains and then I keep some position as long as it moves up. Right? How exactly you enter at pullback? I'm entering at pullback when the stock is moving up. When the stock is coming down, I don't at that time. So when the stock is moving back up, that time I enter and volume should be high. How to have small stop loss on weekly chart for investing purpose? You have to look for daily chart for the entry. That's what I showed you. Your entry will be same on this day because stock doesn't know you are using weekly or daily. After you have taken an entry, you can switch to weekly chart for your exit mechanism. Because if you wait for weekly, Sometimes you get a good entry, like Astral was a good chart where you got weekly also and daily also aligned together. So this is a very long base breakout and consolidation was also there. So even if you take entry on weekly or daily, it based on 3-4% stop loss. So here, right? Minimum length of base I answered already. View on chemical sector. Yes, Mukesh, you want to answer this? View on chemical sector, they are asking.
So the TA we don't even know. So
Yeah,
it's
so
just that it shows in the scan. We look at it and
yeah,
then
correct. So stronger stocks, if you find, then you have to go for with the stronger stocks. So if you think in a sector there are a lot of strong stocks, probably I think you will get to know about this part that okay, this sector is very strong. For example, oil and mining, refinery. So PCL, then you see now check sector is strong. So that's how you get to know, right? How do I modify my stop when I add quantity? Stop loss is based on new stock. When I am pyramiding up, that means the stock is showing me another setup to buy. So the setup is similar to previous point where I bought it. So stop loss will be based on the same logic as I was adding it before. So that's how I modify my stop loss. Right? Second time, if I'm adding a stock, there must be a setup. So that setup's logical stop loss is the fresh stop loss for all the position size. Right? When a stock from the weak sector is setting up, can we go for that stock? Yeah, yes, you can go if there is no other stronger stock from stronger sector. A strong stock from strong sector makes quick money. So I look for strong stock from a strong sector. That's what I do. Any screener rule to find the stocks that don't fall down despite sector fall? Yeah, if sector falls 20%, you have to look for the stocks that have fallen less than 20%. That is the basic rule. So if Nifty fell down 15%, you are asking me which are the stocks that didn't fall. It is mathematics, right? The stocks that fell probably less than 5%, they are the stronger ones. So this is the rule. So this is the screener rule for them, right? So examples of wrong breakouts. I have tweeted almost 100 tweets of me, I think, on there. I think false breakout, you can just search for false breakout. There will be 100 plus tweets on my false breakout. So you can just read them. All about false breakout. Can you share your risk reward and win rate just to set my aim? My risk reward and win rate will be different based on my strategy. So even if I say you this is my risk reward ratio, let's say you are a positional trader, I am a swing trader. My risk reward ratio will be lesser than you because in swing trading we are taking stop losses also. In positional trading you are trading only 6 or 8 stocks in probably 3 or 4 months because you are using weekly charts. So that will be highly skewed in your favor. Let's say you are also a swing trader, me also a swing trader. Now, my style is breakout, your style is pullback. So risk reward ratio will again be skewed highly to your side because you are buying at the pullback, which is confirmed after a breakout. So that is why these numbers will be different for everyone. So you can't have a single shot aim. I can't compare my win percentage with an investor, right? So that's what I'm saying. Can you please share your A list? You can play this recording again, right? You will get all the names. But this A list will every day change. Every day it will change. So this A list is valid only for today. Tomorrow new stocks will come up, right? Multi-year breakout, I answered this, right?
yeah, it's same question he's asking again and again. I dismissed it twice already. It's a
Yeah, this is a good question. Which moving averages are there in these weekly charts? This is 10, this is 40 EMA, 10 week and 40 week. How to get this closing on. So now I am a, I think, agent of markets myth also. So they are asking how to get closing bar. So you can just switch it off in symbol. Google, sir, Google. Basic stuff you can Google. What's your take on Bitcoin chart? Yeah, it can be a continuation buy. You are right. How to enter right stock out of many found after screening. How to enter is like you have to look for entry points. So like if I get an entry point like this probably, so this is a good structure as per me. So something like this I'll be looking for. Right, these are good structures. So that's how I look for entry points. Very simple. Tata Motors, Kalyan Jewelers, Tata Consumer. This one is inside bar, Sonata Software, TRL, Transformer and Rectifier. So that's how you look for entry points. Now 8 stocks are there. Then if I go in much detail, it will take roughly 20-25 minutes to explain what further to look for. Sector, MCAP, strong sector, opening gap, if there is any, that's how. Reasonable total portfolio size. What is your answer? What would be a reasonable total portfolio size?
I think it depends on the person, right? So how
Uh,
much trading, I think he means about trading
yeah, I
portfolios.
mean, if you're a beginner, you can use 20% of your capital total, I mean, net worth capital for trading purpose, 20% if you're a beginner. Slowly, then you progress, you can increase that part if you gain confidence, right? Risk management, I just do everything is on Twitter. Openly, I have shared. Maximum drawdown 5% I take, no more than 4 stocks where I can make a loss. So if 4 stocks are risk free, then only like if I buy 4 stocks, if one of them becomes risk free, I will buy fifth name. Risk management, position sizing, I control risk less than 0.5% mostly. Should we see weekly chart or daily chart? Depends on you. If you are a swing trader or a positional trader or an investor, RS will be applied on daily chart. It will not be applied. It is showing you the list of stocks that are performing better than the benchmark. It is not like we apply RS somewhere. We just see the performance of stocks that are performing better than the Nifty. So this is the concept of RS. So now you can read newsletters also, 1967 newsletter by Richard, and then 1973, Richard Love Super Performance Stocks book, chapter number 7, you can read that. Minervini has mentioned in his book this chapter also. You can read about 1993 newsletter. So we are just checking for RS. Uh, that's hypothetical question on daily or weekly. It's not anything about daily or weekly. It's just like comparing performance of 3 months. So whether you do that on weekly, it will be like you on weekly because 1 month has 4 weeks. So you'll be comparing 12 weeks performance. So your indicator setting will be 12 on weekly, right? Do you use margin? Yes, while shorting, I use margin. Otherwise, there is no other way. I generally avoid taking entry if EPS is not growing. Generally, I have traded. If the chart structure is so strong, I can take entry. Like here, you see chart structure was good here. January 24, EPS is going up. Like, I mean, still okay. I will take entry. Comment on maximum number of open positions at one time. Uh, Depends on your position size, right? If your position size is, see, there are some handles on Twitter, ultra legendary handles, they have 50% stop loss. So here you can make only 2% position size. So here they are owning the complete market. So you can have 50 stocks portfolio, but it will hardly move your portfolio up. I mean, that's a fact as per me. You can disagree if you want to. Now, uh, if your stop loss is tight enough, you can have a bigger position size. So your money will be over in 6 to 8 names. Then you won't find any other, you will be left with no cash. So it depends on your position size, depends on your entry point, your stop loss, right? So stop loss for 5% circuit limit stocks. you can only control position size. You can't do anything for 5% circuit. So I personally don't go more than 5% in them. Like position, not more than 5% in circuit stocks. If a stock RS start deteriorating and stock consolidated, what should we do? Sell or wait? Price is supreme, sir. So if price breaks out, RS will increase. So price is more supreme. And other factors also to be seen. Volume also, price also. That so not only RS. RS doesn't decide the exit. I mean RS alone doesn't decide the exit. You have to look for the price and volume also on the chart. Right. So any question you want to take now? There are so many, right? It's more related to entry, exit, and then we have
Yeah, just checking anything.
this one is like how to plan an entry before start of day. So I have a B list. So I have a B list which has roughly 213 names. I every day scan them. They are very strong names. And then whatever I like, I put that into A list in early morning. And then I put from core to high priority the names that I like. And then I will read some basic EPS parameters and I'll then place my GTT orders if I have to place. And that's how I plan my day. So nothing else, right? Uh, okay. Working professional advice, I explained you. I stop loss philosophy for IPO stocks is same. What we cover for other stocks because after 21 days your EMA will come up, but price structure is what I'm looking for in IPO stocks. Uh, Now this is the pain of everyone. In the last 2 weeks, I had stop loss in two of my stocks and they never gave me the same price for entry. Why do you need same price for entry, by the way? In fact, the stocks gained back the same day or very next day. How one should re-enter? Again, sir, it's hype. See, I cannot answer because I don't know about your entry. I don't know about your exit. I don't know about where did you place the stop loss. Was it logical or not? Because what happened even when someone was trading with me, they exited Oil India here at arrow number 2. There was no exit. So now they say stock again shot up because your end exit was poor. So I don't know about your exit exactly. So that's why very difficult to answer this question. VPCL was in cash. Tom, how to see entry again? How to get small stop loss on weekly chart? Sir, nobody said you to open a weekly chart. Entry is given by the stock on one particular day. So for instance, Bhel I explained you, or let's take the example of Dixon. It gave you entry on this particular day. Now you are saying me, I want to use weekly chart for my entry. So for you, there are some ultra legendary traders who wait for Friday close. I mean, what will happen on Friday? I mean, stock is giving you entry on Monday. You are saying, no, I will take entry on Friday. Stock doesn't know you. It is you who are following, or you have only on all your own rules. So stock is giving entry on Monday, take an entry, either near the close or near the opening price, or maybe whatever you want to follow. But Friday close will wait for Friday close. Then stock runs up 20%. Then they take 5% position size. Then rockets, emojis, everything on Twitter. So weekly charts are used for exit mechanism after you take an entry. Now, how to get a small stop loss is by entering on daily chart. For entering on the stock, you have to use daily chart, in my opinion. Right? Or you do your homework in advance. Homework is like CAMS was one reversal buy. So you have to do your homework in advance. So this is the chart structure which you already know it is very strong. So this probably is the entry. So you place your GTT order, right? When did you take the decision to leave the job? 2019. 16 I joined, 19 I skipped. Stop loss criteria, one interview with Samco on YouTube, freely available, 2-part series. There I have 5-minute candle, 15-minute candle. I seldom open that, right? Very rarely. After strong upside movement, how to decide whether to book some profit or start pyramiding? I book some profit first and then I think of pyramiding. So I lock maybe 30% and then whatever I have, then I will pyramid up. I want some gain in my pocket, so that's why I lock some gain. How to have, yeah, this is a good question. How to have this earning indicator on trading view chart?
Yeah.
Yeah, this question comes in my dream also every day. Sir, this is a indicator by one Twitter handle. You have to request him. Finally, Nitin. He created a lot of headache for me.
Yeah, it's not that useful to have this attack.
So this is the handle finally, Nitin. You have to request him and he will give you the indicator access. Okay, sir. So that's how you will get this indicator. What else, sir? Yes. Will you further add when you are already in 20% profit? Yes, I will add. As long as the stock is moving up, forming good base, giving me pullback entry, I'll keep on adding. Is 25L portfolio enough to leave the job? I mean, you don't need to leave the job. I don't know why there is a craze of leaving the job. Why do you want to leave the job? Now you have technology. Your stop losses are automatically placed in the system. Buy orders placed in the system. Nicholas Darvas was trading in 1958. He never left the job, right? So he was dancing across the world. Read his book, How I Made $2 Million in the Market. You don't need to leave the job. Why is there any obsession on leaving the job? I left it because it's my passion. If it is your passion, you can leave. Otherwise, no need to leave. You just have to place the buy orders and stop loss orders, and your trading will automatically go up. So one of my known one, like he presented this week, he's in Navy merchant. He never sees the market for three months, two months. He did well on weekly charts, just once places the stop loss and runs away. So again, portfolio, you should have an emergency fund. So that should take care of 1 or 2 years of your expenses. Total number of position to be 6 or 7. How to bring down number of position from 20 or 25 to 6 or 8? Very good
By
question.
selling, by selling rest of them.
Yeah, so you so you need to sell your loser, sir, if you are having any loser. So once you have a loser, you just sell your loser and you add to your winners. Is MarketSmith subscription worth for an investor? I mean, I have no idea, sir. It's worth for me. You can probably take 1 month trial, which is for I think around 25 rupees, and then you can decide if it is worth or not. I mean, in USA also a lot of people use it, India also use it. It works for me. I mean, if it will work for you or not, no idea, but it works for me. Hmm? Granules in the individual
No, no. Yeah,
view on granules, I'll skip actually individual stock.
yeah, yeah.
So what should be the trailing stop loss when the trade is risk free? Again, I answered, right? 21 EMA or maybe some trend line or maybe chart pattern. How to ride a stock which has already given 150% return and still no signs of breakdown. Keep on riding. How to ride a stock which has already given 150% return. So for you, stock is up 150%. So that means you're already riding it. So same way you have to ride further ahead, right? Because it's 150%. Maximum risk per stock should be 1%, irrespective of capital, 1.5% maximum risk on one trade. So uh,
So
10K maximum risk. Yeah.
I see questions repeating
Yeah.
regarding them and all.
Correct, correct, correct. Chart patterns book, someone is asking.
Hmm.
It's by Richard Schebecker, technical analysis of stock market profits. You can read basic one by John Murphy, technical analysis and financial of the financial markets. For chart patterns, you can read this book. Okay, and you can read Richard Schebecker book also, technical analysis and stock market profits. If you are more interested and have stamina, you can read about William Giller book, how chart patterns can help you, how charts can help you in the stock market. This is the book where Minervini, Sir Mark Minervini also mentioned in his book. He credited him. So this also you can read, right? So then unable to see my screen. No, you are able to see my screen, right? Trend line. Ticker tape has 1 year Nifty return. RS and EPS. RS is not available in TradingView. You have to check for 3-month performance. How do you decide your buy point? It's when the chart is coming out from a consolidation area. That is my buy point, right? How to assess market condition? Again, from the stocks that you are trading. If they are working, you increase risk. If they are not working, you decrease risk. Any book you would suggest for good entry and exit? Mark Minervini has written 2 books, How a Think and Trade Like a Champion, uh, and Trade Like a Stock Market Wizard, these 2 books. And Momentum Masters is 1 book. Chapter number 7 is on entry point. So you can read that chapter 7 also for entry. That's an interview of all the traders. And Stan Weinstein, William O'Neill. So these 5-6 books, right? How do you not get squats? Your what list? No, I mean, I also get squats. He's asking your stocks always give strong breakout. No, Jubilant Pharma squatted for me. So I think you didn't observe. He's saying that my stocks give strong breakout. No, Jubilant Pharma is a stock that squatted for me. So I trimmed half and I am still holding half position. Otherwise, most of them have, it's because I have already sold the losers. That's why you are seeing uh, the stronger stock. So I don't keep losers. That's why you are seeing stronger stock. So it's not like that my stock doesn't squat, it squats. It's just that I sell them. Do you choke your trade? No, I don't choke my trade. Why do you use log charts? You can Google once or you can read this book by John J. Murphy for a logarithmic chart. So, or maybe you go to my older tweets, you will get this answer. Yeah, how to filter the stronger charts. I explain fundamentals. I don't look for fundamental. I only look for EPS number here. PAT, I mean profit after tax, or EPS I scan for. That's it. Nothing much. Uh, Nothing. Time frame for short-term trade. I look for as long as the stock is going up. So I trade. How to find out fresh 52-week high breakout stocks? I mean, I'm assuming you want to catch them before the breakout. So then you have to do the homework. Again, relative strength screen will show you the stronger stocks before the breakout. After the breakout, you have to follow some Twitter handles. So there are so many. So they give you a lot of stocks after the breakout. So for that, there is no headache. Uh, so some kind of screener MarketSmith I use. Uh, so is there any new question do you see?
No, I was just scrolling through. So
RS and percentage thumb, do you use opening range?
where to get Dan Janger's newsletters? I think somebody asked.
See, you have to go to chartpattern.com, not patterns, chartpattern.com. You have to take a 2-week trial. I'll show you. Here you will find member login, free trial. You have to take the free trial and then you will be getting an access to his newsletters. And for your information, he's writing since 1997. So till I think 2014, you have 65,000 pages. So I have, but I cannot share because of copyright issues. That's the only issue. Otherwise, I would have shared because everything I share, but this stuff has copyright and they're very strict for their copyright issues. So you can just log in, take a free trial, and then you can read. I think it's a 14 days trial, and you can read his newsletters there, right? So Zanger report comes, I think thrice or four times in a week he writes, right? Anyone?
So last question, I think. So somebody is asking about how to improve on psychology part. So
Why your trading journal is the best book. So you have to keep a record of your trades. You have to note down where did you entered, where was your exit, and what was your position size? Was your entry perfect or not? Was your exit perfect or not? How can you improve on it? So psychology will be improved. Then I have muted a lot of handles. So stay in yourself if you are not a beginner. If you are a beginner, probably you are following, let's say 100, 200 handles. After 1 year, 2 year, you will think that, oh, this is noise for me. So you have to avoid noise. So by avoiding noise means have a uh, focus on your own system and try to improve it through trading journal, and you need just 5 to 6 books. I mean, you need to read, that's enough. So psychology part will be sorted with the more you trade. So that's how you will get control about your psychology. Yes, anything you see now? No?
no, I think then most of them are stock and other stuff. So
Yeah, yeah, how to maintain trading journal trades with, how do you handle when going into a result? So I keep my position size small, less than 5% if I don't have a profit cushion. If I have a profit cushion, I may still hold the stock, but I will trim my position size, right? Uh, which broker? For me, Zerodha is my broker. Uh, how to exit on for Dan Zanger newsletter? Yeah, I answered. Yeah. So it's more like I think we covered most of the part on selection, entry, exit, right? So
yes, yeah.
uh, so yeah. So Mukesh ji will share